All right, let's dive right in. We regularly break down interesting stock setups, and today we've got a tech giant in a really fascinating spot. Now, before we get going, just the usual reminder. This is all for educational purposes. It is not financial advice. You gotta do your own homework. So, today it's all about Amazon. And we're asking a pretty provocative question. Is the market's recent panic actually a huge gift for savvy investors? Because when you look at the numbers, you'll see a story that, well, just doesn't quite add up. First, let's talk about the headline, the top line. Amazon didn't just meet revenue expectations, they absolutely blew them away, pulling in a massive $213 billion. I mean, just think about that for a second. That's almost $2 billion in sales every single day. And here's the real kicker. The profit engine of this entire company, Amazon Web Services, is just on fire. It grew 24%, which is its fastest clip in over 3 years. For the part of the business that makes the most money, this is a gigantic green flag. So you'd think, right? With numbers this good, the stock should be blasting off. But it's not. It's actually down 19% from its recent highs. So what in the world is going on? Well, it all boils down to one single massive number. $200 billion. That's the number that sent a shockwave through Wall Street. This is Amazon's planned capital expenditure, basically a massive spending spree on AI data centers. And this plan has just obliterated their free cash flow. And that, right there, is why the stock got hammered. And that sets up what we're calling the Amazon paradox. You've got this absolute titan of an industry that's performing incredibly well, but it's under serious pressure from the market, all because it's betting big on its own future. Now, this chart right here, this tells you everything you need to know about how Amazon works. You can see e-commerce is by far the biggest piece of the revenue pie. But look over at AWS. It's a much smaller slice of revenue, yeah, but it delivers the lion's share of the actual profit. It's the engine, and that engine is accelerating. So the big question remains, is this 19% drop a huge red flag, or is it a golden opportunity? To figure that out, we've got to pop the hood and really dig into the core financials. And what we find under the hood looks really strong. Revenue is up a very healthy 12%. But check this out, earnings per share up 30%. That means their profitability is growing more than twice as fast as sales. That is exactly what you want to see. The balance sheet is solid, and its valuation, with a forward PE of 26, is looking way more attractive than it was last year. This isn't a picture of a broken company. It's a company investing like crazy. And you know what? Wall Street totally agrees. Out of 44 analysts that cover Amazon, 41 of them rate it a buy. I mean, you can't get much closer to a unanimous vote of confidence than that. And their average price target suggests there's about 33 to 37% upside from where we are right now. Okay, so the fundamentals look good. Wall Street is clearly on board. But what about the chart? What's the technical picture telling us? This is where it gets really interesting for a short-term trade. We're not looking to ride a trend here. We're hunting for what's called a mean reversion trade. Basically, a sharp snapback after a stock gets pushed way too far down. All right, let's talk levels because this is crucial. The most important zone on this entire chart is the support between $198 and $200. That was the low point right after earnings, and so far it has held like a brick wall. That is our line in the sand. If the stock closes below that level, especially on big volume, this entire trade idea is off the table. Now, the whole reason we're even talking about a bounce is this number right here. The Relative Strength Index, or RSI, recently plunged down to 23. Look, for a $2 trillion behemoth like Amazon, a reading that low is incredibly rare. It's a flashing signal that the stock is just deeply, deeply oversold. And this is what makes the setup so compelling. We've seen this movie before. The last time Amazon's RSI got this beaten up was back in mid-2023. And what happened next? The stock went on an absolute monster run, rallying 47%. Now, history doesn't repeat, but it sure does rhyme, and this is a pretty powerful rhyme. Hey, just a real quick pause here. If you're getting some value out of this deep dive, do us a huge favor and hit that like and subscribe button. It honestly helps us a ton and lets us keep making these kinds of detailed breakdowns for you. And by the way, for those of you who want every single number, the exact trade card, the whole shebang, we've put it all together in a full report, right there in the description. So, a great chart is one thing, but we need a reason for the stock to actually move, right? We need a catalyst. So let's look at what could drive this trade and, just as important, what are the risks that could totally sink it? We've got three big ones on the radar. First, a Supreme Court ruling on tariffs just removes some uncertainty, and that's always good for a massive importer like Amazon. Second, and this is the big one, NVIDIA's upcoming earnings. If they crush it, it could light a fire under the entire AI spending story, which is a direct tailwind for AWS. And finally, the setup itself is a catalyst. It really looks like big, smart money is starting to quietly buy shares down at these levels. But we have to be realistic about the risks. The market is still terrified of that $200 billion spending plan and whether it'll actually pay off. The broader tech sector is also under a bit of pressure, and that could drag Amazon down with it. And even though the tariff stuff is better, it's not totally gone. So all in all, I'd give the setup a moderate risk rating. Okay, enough theory. Let's get into the nuts and bolts, the actual actionable trade plan. We're looking at this as a swing trade with a holding period of somewhere between 1 and 3 weeks. So here's the plan. We're looking for an entry somewhere in the 205 to 215 zone. Our stop loss is a hard stop at 195. That gives us just enough room below that critical 198 support level. From there, we've got 4 targets. Target 1 is 225, about a 7% gain. If we clear that, we're looking at targets all the way up to 255 plus, which would be over a 21% gain if this thing really gets moving. Now listen up, because this is arguably the most important part of the whole plan. Getting in is the easy part. Managing the trade correctly is what makes the difference between winning and losing. So, here are the rules. Okay, here's how you manage it once it's on. The goal here is to de-risk the trade as fast as possible. The moment we hit that first target at 225, we're selling 40% of the position, and we immediately move our stop loss up to our entry price. This is key. It makes the rest of the trade completely risk-free. From there, we just keep selling pieces at each target, trailing our stop up behind us to lock in profits. And let me be crystal clear. If our initial stop at 195 gets hit, the trade is over. Done. We take the small loss and move on. No averaging down. Ever. So, if you want to boil this entire analysis down to one sentence, here it is. This is a high-conviction, mean reversion swing trade on arguably the world's most dominant tech company, which has been sold off because of capex fears that historically have turned out to be huge long-term catalysts for growth. Hey, if you want to keep this conversation going and get more analysis like this, come and join our communities. We're on Twitter, Telegram, and Reddit, and we'd love to see you there. All the links are right in the description for you. Now it's your turn. We're always looking for the next interesting setup to break down. So we want to hear from you. What stock should we put under the microscope next? Drop your ideas in the comments section below. And that is a wrap on Amazon. Just one final time. This was all for educational purposes, not a recommendation to buy or sell anything. And if you want all the specific numbers and the trade card, don't forget to download that full report. The link is right there in the description. Thanks for your time, and we'll catch you on the next one.